All right, we're going to take a quick look here at the dollar, euro, and yen. Some of the evidence says a dollar bottom is forming, and that, of course, is important to a lot of the markets. So let's switch over to the charts, and I will show you exactly what I'm talking about. This is the dollar, and I'm just going to blow it out a little bit further so that you can see the cycle patterns are what we're looking at here. And for those of you that are new to our cycle analysis, we look at the rhythms in the market. Cycle analysis is the energetic movements in the market. We look at multiple time frames and support resistance levels and our proprietary momentum indicators to give us very important information. What I want you to see on this chart, which is going all the way back here to around 2020, you can see the big diamond top that formed in there. That big movement was around the pandemic. And you can see that these dominant cycle and minor cycle was pointing to a low right around here. And the same thing right around here. And the configuration of this is very positive. As you can see, as it rallied most of the time, that set up another big rally to the upside. And this, of course, happens here as the interest rates are moving up here in the US, as the Fed is tightening, and that gives all of this strength here to the dollar. I'm going to take a little closer look here for you to see. And this is important, as there is an important bottoming going on right here, not only on this dominant cycle, not only on this minor cycle, but also the timing on the monthly cycle also, which I'm not going to show you. That'll be in the big picture analysis, part 2 that I'm going to be doing in the next week or two. And then you'll get an idea of that monthly chart. But you could see this upward turn right over here. Now, that doesn't look all that significant yet. The momentum here, as you see in a reversal scout, is still pointing to the downside. So this has work to do. It's come into this support zone. There's dominant supports here, and the monthly support, that major 50 right there, is fairly close. And you can see that it is trying to turn up here, as now it appears that the Fed will stay tight all the way into 2024, according to a lot of the Fed speak that we hear out there. So we're looking for this rally to come out here into sometime April of this year. And when I look at the euro currency, I'll show you why I think that the dollar is going to rally out into April. So this is about 107 3/4. The top of that right over there is around 110.5. That would be our target zone between now and April. Of course, if the dollar is moving up, that probably means that it's going to be a rough time for the metals. They might have some pullbacks in there. This is not looking at a new high in the dollar. This is looking at a positive phase and a rally in there. And that probably means that interest rates are still going to be moving to the upside. We actually think those are going to go back over 4% on the futures on the 10 years. And that might, of course, be a problem for the stock market also. As the dollar strengthens in here. Look, you can see that we're not looking for a huge amount of strength, but a period out into April. Let's look at the daily chart. This is just phenomenal. When I look at that, let me get this a little closer for you, but I want you to see the cyclical patterns that are in here. There's a dominant and minor cycles in there, and cycles sometimes shift, and you can see in here what was the original cycle, and then this shift that went on right over here. When you get into the period where the minor and the dominant cycles are coming down, we put in these yellow areas here because these are cautionary periods of risk right in here and right in here and right in here. Also, when you break the key low, as this one did, it sets you up for decline. So this was a little bit longer than we had expected, but that's in relation to the topping that was going on in the euro. So what's very important to look at is the relationship between the euro and the yen. And I'm going to go back to the weekly here so that you can see that the euro and the yen and the weightings that are in there. Where are those right there? Right over there. Okay. So euro is 57.6%. Japanese yen is 13.6%. So you get about 70% of the dollar index just by looking at those two currencies and how they relate to the dollar. So with this weekly cycle turning up right over there, and what looks like the end of the daily cycle right over here in this upward turn, that is giving an indication that there is a bottom forming right now. And I have a note in here that you can see that the US dollar JPY trough is due the first or second week of January. In other words, the low in the US dollar versus the Japanese yen is due to come at the same time. And I'll show you that in just a moment. Let's first head over to back to the weekly chart right here, and I'm going to show you the euro currency. So that's EUR versus the US dollar. And we'll take a look here, and you can see, look at that beautiful head and shoulders top that formed in there, and the measurement was right over here. Here was an important breakdown. It fell right down into this minor cycle bottom there. There was a shift from the dominant, and then this upward turn in momentum, and you saw the euro currency moving up. But now it is beginning to move down and peak. This only points to a low sometime in late January and then another attempted rally. This indicates that for a brief period of time that the euro is saying that the dollar will be range bound for a while before it then begins to pick up. And then this period right over here is where it declines into April, and that's where I showed you the dollar is likely to rally into April. Remember, this is 57% of the DXY, and that's why we look at the inverse correlations in here to give us an indication. So with this peak that went on right over here, this suggests a decline into late January, or a rally in the dollar into late January. When I look at the daily chart, there is actually a breakdown right over here. These were beautiful, strong cycles that you can see right in there. Look at the low here, perfect. The low here, perfect. The low here, perfect. This was a little bit long, but the inverted head and shoulders got you right up to the measurement right there. Beautiful. Pulled down right over here in this declining phase. Positive cycle. Gets you right down to the buy zone or the slim ribbon, which was positive right over here, and then begins to give you these signals. This is the slim ribbon PO on the bottom. These are upward momentum reversal signals right in there, and it's beginning to weaken right in here, as you can see, even though it's still giving you those signals, and it's trading in a range. Here was the lows right over here, and now it's broken that. So that says that there's likely a decline coming. Where? Towards the 3rd to 4th week of January. So that lines up with the weekly chart in the euro, and that says to you that we're likely to see this dollar rally we're in right now going up into that period of into January. Then there'll probably be a rally right over here in the euro, which will bring the dollar down again, and then that decline out into April that we're looking for in the euro, which will continue to give the dollar a lift. This breakdown right over here says to us there's trouble. Once the slim ribbon PO goes red, it will be giving us warnings that it will be moving down. You can see as it was doing right through here in these signals, here again, and that gives you gives sense when you're in these downtrends and negative. This is when it was in the uptrend and positive. This looks like it's about to give way. You can see the slim ribbon collapsing on itself right there, and that will neutralize it and then probably turn negative. That is bullish for the dollar. And again, if that's the case, it's probably going to weigh on the metals. It's probably going to mean that interest rates are going to be going up, and it probably means that the stock market's going to be having trouble. Let's look at the US dollar slash JPY. It's the reciprocal of what we're looking at right now. So now when it goes up, it means the dollar is strong and the yen is weak on this chart. And you can see where the bottom was due right over here. These two lines are showing you about where the range of the trough would be, give or minus a few days, and that made the bottom. And here there was a slight shift to the right that we put in there, but you could see the alignments right here and here and here and here. Beautiful cyclic action right there. Here's where you broke down and it turned negative. This is called a left-hand translation, where it breaks down early and turns negative, and then you had 1 and 2 cycles to the downside. That means that these are resistance areas right over here. It's likely to stall somewhere here around 134.70 to about 136.20, and then come down, but not make a lower low and then begin to move up again. What does that look like on the weekly chart? Well, right over here you could see it looks like the dollar bottoming. And we have the projections that could even be higher if the dollar gets really strong in here or the yen gets very weak. Also, the fact that this pattern is showing what we call a negative configuration. You see where this low was pointing right here, and then this made a lower low. It means that this rally here for the dollar yen, which looks like it's going to be very strong, potentially out over here into the March period, will probably stop in these resistance areas, and this might actually be sell areas right there, but still we're looking at a period of probably at least 3 months on the upside for the US dollar JPY. So again, that's where it's turning up on the weekly chart. This is where it's beginning to turn up on the daily chart. Look at the slim ribbon PO on the bottom, how that was telling you and warning you of downside resumptions. And now we're waiting for this to turn first blue when it neutralizes, and then green, and we think that will happen. Look at the slim ribbon, how negative it was and configured this way on the downside. That's why it's so red like this, but we think it is about to turn up and make that bottom. So what is the sum of the evidence in here when we look at this? Well, we see that the dollar yen is telling us that the dollar is bottoming and it has probably a few months to rally. The dollar euro is telling us that the euro has peaked and actually has a breakdown in there on the daily chart, and that it's likely to trade a range, come down into late January, try to rally again, and then come down into April. All of that is suggestive of a stronger dollar. And when you look at the sum of the evidence, that says to us that it is pretty likely that we're going to see the metals try to rally, but as they are right now, but begin to falter and struggle. That probably will give us a buying opportunity. And also that the stock market, even though we're looking for a rally up into January here, probably won't be able to hold rallies very well. And that that sets up for the decline into March that we're looking for, probably peaking somewhere at time late January. Also, all of that is just suggestive that the conditions for the market, the stock market especially, are not going to be great, and the conditions for the dollar look like they're going to be good. Well, for probably at least 3 months. That's a look at the dollar and the euro and the yen and the sum of the evidence and what it probably means for the other markets.